Welcome to Macro Mining from mining.com.au with me, Danielle Doporto. Macro Mining is your new weekly news summary of the big picture stories pertaining to mining, minerals, and markets. Following decades of delay and transnational legal wrangling, operations have begun at the Simandou iron ore project in Guinea. Simandou is Africa's largest greenfield integrated mine and infrastructure project, comprising around 650 kilometers of multi-use rail lines, as well as barge and port facilities. The $23 billion project features the world's largest untapped iron ore deposit and is expected to produce up to 120 million tons of high-grade iron ore exports per year. This would position the West African nation as one of the world's top iron ore exporters. It already is one of the world's biggest bauxite producers. Guinea's mines minister told reporters that his government will fast-track the development of alumina refineries and iron ore pellet plants. This could transform Guinea's economy through the development of infrastructure and industrial capacity, as well as the creation of jobs. These developments do have many pundits concerned about repercussions for Australia, which currently is a top global producer of bauxite and, more significantly, iron ore. Western Australia's Pilbara region currently accounts for nearly half of all global production, with the state collecting around 9 billion Australian dollars in iron ore royalties just in the financial year 2024 to 25. By the time Simandou's operations reach full volume, around 28 or 29, iron ore prices are expected to have come down, cutting into benchmark prices, profits, and tax revenues. The state Cobalt agency in Democratic Republic of Congo, the DRC, has announced the production of the first 1,000 metric tons of traceable artisanal cobalt. Congo holds 72% of global cobalt reserves and accounts for 74% of supply. Artisanal mines, relying on precarious individual manual labor, produce the bulk of this, employing 1.5 to 2 million people directly and indirectly, supporting more than 10 million people. Much cobalt is a byproduct of copper mining, which is pivotal to the country's southern provinces. This week in DRC, authorities suspended a major Chinese-owned copper and cobalt operation after a dam collapse spilled several million cubic meters of contaminated water into the country's second-largest city, causing evacuations and concerns over well water pollution. It is the latest in a string of environmental disasters in the Copperbelt region between the DRC and Zambia. On October 15th, following an 8-month suspension on cobalt exports, the DRC introduced a strict quota system designed to increase oversight and promote local processing. Cobalt prices are expected to keep rising, with global demand forecast to rise 40% by 2030 and ethical sources remaining in limited supply. In Russia, President Putin has ordered his cabinet to draw up a roadmap for the extraction of rare earth minerals by December 1st. Its Natural Resources Ministry estimates rare earth mineral reserves of 28.7 million tons. Russia says it is also interested in partnering with US companies on rare earth projects, though this will likely be untenable so long as the conflict with Ukraine and associated sanctions continue. In April, the US and Ukraine signed a deal giving Americans preferential access to Ukrainian minerals. Meanwhile, Greenland continues to attract significant interest from so-called Western nations. In addition to its strategic Arctic location, Greenland boasts 25 out of the 30 raw materials deemed critical by the EU. 3 of Greenland's rare earth deposits may rank among the world's 10 largest. But mining is a slow game, and Greenland lacks infrastructure and local mining expertise while possessing very challenging terrain and delicate ecosystems. In 2021, Greenland passed a law limiting the amount of uranium in mined resources, effectively freezing development of a rare earth mine project. Now it's time for a segment called Expert Insights, where we cross to subject matter experts for their analyses of hot topics. The recent run in gold prices pulled a lot of established producers up with it. Now, as those prices seem to be finding a new equilibrium, plenty are wondering if and when those gains will be reflected towards the smaller end of the market, among junior explorers and mid-tier producers. Geologist turned noted stock picker James Cooper weighs in.
I think there's a lot of anticipation for the juniors, and I think we're getting close to that point. I think gold prices have done really well. As a lot of people know, producers have done really well in 2025. Gold has pulled back, so I think if we see some consolidation in the gold and the precious metal prices, I think that gives us a bit of a foundation, and maybe there'll be the next leg up into 2026. And I think that's when the focus will start to shift towards the junior end of the market, specifically juniors perhaps holding large undeveloped resources in the ground. And you might be seeing larger companies starting to sort of look at the future and start to perhaps mergers and acquisitions, so getting more ounces to add to their portfolio.
James provided mining.com.au with that exclusive clip from the sidelines of the Noosa Mining Investor Conference, happening now on Queensland's Sunshine Coast. Our very own analyst and broadcaster, Shay Russell, is there and brings us these insights.
Thanks, Danielle. One of the interesting things about this conference is that rumour has it there's a couple of heavy hitters in town looking at explorers to see what they can add to their portfolio. It doesn't happen very often, but that's why you come to these events.
Looking ahead now, on Wednesday, November 19th in Brisbane, the 2025 Wiser Gallery will bring together women in sustainable energy and resources to network, upskill, celebrate, and keep increasing representation and advocacy for women in the industry. We recently caught up with Minds in the Vines founder Nathan Lodge and took advantage of the opportunity to pick his brain about the trends he's seeing in the macro space.
I think it's a good time for these juniors to list, especially in sectors like critical minerals, gas, anything that, we are sort of, paying an exuberant price for. I think it's a very good time for companies such as that to list. Even if the gold price does come off, right, by 30%, you're still in a better position with gold anyway. You're still up. So, I think retail investors, I'm just talking pure retail, are starting to see that. So even if gold does drop by 30 or 40%, you're still not losing on that. I mean, any time a major government across the world does sign a deal where it comes with, in the mining space like rare earth, it's going to have a huge effect on every junior company out there, because all the bigger players still don't have enough what they need, so it's gonna have a tailwind for them to. It's gonna trickle down to them eventually, because the major players around the world can't deal with the demand.
That concludes this second ever episode of Macro Mining. If you have any feedback or requests for future episodes, please comment below and keep an eye out for another episode next week. I'm Danielle, and I thank you for watching.